12 months on from the infamous mini budget last September, which had a big impact on the UK economy and the UK housing market. And this September, 1 year later, is shaping up to potentially be just as important. We know from the most recent figures from both Nationwide and Halifax that house prices are down around 5% at least year on year. The question is, where do we go from here? Is this 5% the small correction that some so-called experts have been talking about, or is this just the start of much bigger falls that people like myself and others have been predicting for the past 12 months? So the next 30 days, we've got 10 major economic events coming up, and those events are potentially going to shape the sentiment around the UK economy and the UK housing market for the next few months at least. So we're going to go through each of these events in this video. I'm going to tell you what to look out for when these events take place and what this could potentially mean for both the UK economy and UK house prices. So what I'm probably going to do for this video, I'm actually going to hide my webcam, otherwise I'm going to be in the way of a lot of these charts that I want to show you. So I've got 10 of these events to show you. The first one coming tomorrow morning at 7 a.m. on Tuesday, this September the 12th, is the latest wage inflation data. And last month's was worrying for the Bank of England. We hit 7.8%. Now, the consensus for next month, or this month should I say, is 7.4%. So they're expecting a softening in this increase. Now, if wages stay strong, this is going to worry the Bank of England, and they are going to be very, very unlikely to want to slow down the rate hike. So each of the events we're going to be looking at has potential to impact the Bank of England and the decisions they make. That's why I want to go through them all in this video. Now, if we see a sudden softening and this starts to fall back down, then this takes the pressure off the Bank of England a little bit, and they may be less likely to hike or may hike less overall. The next thing we've got coming is the unemployment rate. So over the past few months, we have seen a small uptick in unemployment in the UK. And things over the past month or two look like they were starting to accelerate. So tomorrow's data is going to be super interesting to see whether we get another major tick up, which will be a strong sign of economic weakness and potentially one more step towards recession and job losses. And then following that, the next day on Wednesday, September the 13th, we have the GDP figures month on month. Now, the most recent figure they reported in August, which would have been for June, was actually a surprise increase of 0.5%. But looking back, the news article suggests that much of that increase was playing catch up from May because we had bank holidays in May and also we had good weather in June. Now we know the weather in July was pretty poor, so it'll be interesting to see whether the 0.2% consensus is accurate or whether we see a greater slowdown here. After that, we have the RICS Housing Price Balance Survey. And if you remember my video from last month, we talked about how this had the lowest reading we'd seen since 2009. So this survey is the difference between the number of surveyors reporting house price increases versus decreases, and anything below zero is seen as negative or seen as bearish for the housing market. So we are well below zero at minus 53%. So it'll be interesting to see whether we head lower from here. When you looked in the global financial crisis, we got down to nearly 100%, but it was minus 95.1%. So that is a huge drop that we saw back then. It'll be interesting to see how much room we've got to go over the next few months. So again, all of these things add up to paint a picture of both the UK housing market and the UK economy. We then have about a week later on Wednesday, September the 20th, is inflation data. And this is probably the biggest one for the Bank of England. This is the one they're going to lean on the most when they're making their decisions. Now, the recent data has shown, you can see it's clearly in a visual format here, that consumer price inflation, so CPI, is coming down. However, we've already seen people like Jeremy Hunt saying they're expecting a blip this month, which is going to be interesting to see what they actually mean by blip. But the key thing this month isn't so much consumer price inflation, unless we see kind of a major uptick here, which would catch quite a few people out. It's actually core inflation. This is what the Bank of England are more concerned about, because core inflation is potentially what is contributing towards the wage price spiral, which if we go back to the very first tab that we looked at, We know that wages are up 7.8%. So if core inflation goes up as well or stays strong, it's going to be very, very difficult for the Bank of England to justify not hiking again. So if we see strong core inflation and strong wage growth, then the Bank of England got a very, very difficult job. Well, I say difficult job, it's an easy job. They need to maintain the interest rate hikes. But from their perspective, they'll see it as difficult. So when you see the inflation data come out, don't focus too much on the consumer price index unless we see some kind of majorly unexpected figure. But it's the core inflation you want to focus on. We then have on September the 21st, so Thursday, the 21st of September, we have the latest Bank of England interest rate decision. So that's the day following the CPI data, which makes sense. They want the inflation data before they make their next decision. We can see what the Bank of England have been up to over the past 18 months. It's been hike after hike. Now, Andrew Bailey, who's the head of the Bank of England over the past week or so, has been talking about how things are changing and potentially we're not in this era now of constant hikes and they're going to judge it by the data. You'd have thought they'd be judging it all by the data for the past 18 months, but there we go. So they're going to take a look at all of the data we've looked at over these past 5 or 6 tabs and hopefully make a decision. So we're already at 5.25%, which is above where many people thought we'd actually get to. There's every chance we're going to go to 5.5%. But if we do see weakening inflation data and weakening wage growth, then potentially they may hold at 5.25% and take a wait and see approach. Now, on the same day, they also release the NPC minutes, which is the Monetary Policy Committee, who actually votes on the interest rate hikes. And we'll be able to see what the sentiment is like. So last time, 8 out of 9 members voted for a hike, whereas before that it was only 7 for the past few months. So 8 out of 9 voted. So look again here for either a weakening or a strengthening or sideways action. If we see a weakening, it does suggest that we will be nearing the peak or terminal rates, as they are calling it. So see what this is. At the moment, it was 8 out of 9 last month voted for a hike. We'll see what happens this month. Following this, a day later on Friday, September the 22nd, we have retail sales year on year, and the UK economy, over 60% of the UK economy depends on consumption. So retail sales are a very strong indicator of UK economic health, and things have not been great for the past year or so. There has been a very small recovery, but we're still in negative territory. But last month we dropped from -1.6 to -3.2. So again, another super interesting one to watch this month to see which direction this goes. Are we going to see another strong drop off like we saw last month? And all of these together just paint this economic picture that makes it much easier for us guys who are aware of this data to draw our own conclusions as to where we think the UK economy and the UK housing market is headed, rather than just basing it on one set of figures such as the ONS or something that isn't overly helpful. You need to look at all of this data together and come to your own conclusions. Following that, on Friday, September the 29th, we have mortgage approvals, another strong indicator of the UK housing market activity and strength, and things have again been dropping off sharply. And we're down to around 50,000 approvals per month, whereas the average over the past kind of 5-6 years was around about 70,000 per month. So we're already down quite sharply, down massively from what happened over the past year or two. So again, watch this very closely. We saw a big drop at the start of the year when everyone was holding off remortgaging as they were hoping interest rates were going to come back down. Then they realised they weren't, so a lot of people have panicked and now locked into new deals, which is why we saw this uptick after this sudden drop here. And then the final two, at the end of September, we have the latest nationwide figures. So like I say, at the start of this video, they're showing down 5% or 5.3% year on year. So that's going to be super interesting to watch to see if that continues, because when you look at this line, that paints some quite strong similarities to this line. So we'll see where we end up. And then as we just break into the first week or so of October, the final one in this video, Friday, October the 6th, we have Halifax, which again, look at this. This is looking very similar to nationwide the way that's heading down. So Halifax also heading down. They're only down 4.6 at the moment, but overall I'm saying between them, with these guys being at 5.3 down and these being at 4.6, I think it's fair to say 5% as a minimum is what we are down at the moment. So watch both of those to see whether the strong falls they both reported over the past month get reported in the next month as well, as that could be a very, very strong indicator. Things are going to head south very quickly in the second half of 2023 and as we head into the start of 2024. So keep an eye on all of those indicators and news releases this month. I think we're at a turning point in the market now. People are starting to accept that house prices are falling. They're down 5%. And now we're at this last piece of hope where some people are like just thinking this is just a small pullback some people are talking about. Whereas if this data is not good news, then I think this will be the final point where people just say, no, look, we are in a much bigger crash. There's many people, including myself, who already believe that regardless of what this data shows. The damage has been done by months after months of interest rate hikes. But there are still some that are hanging on, and the data we see over the next 30 days could firmly break that last piece of hopium. Now, if you're thinking of buying or selling a house at the moment, I'm going to pop up a video now which highlights some of the Rightmove red flags you guys need to be aware of. Over 75,000 people have watched that video, so make sure you guys give it a watch, and I'll see you guys over there.